Hello friends, in the next few minutes I am going to take you through the key events of the recent past and Kotak Mutual Fund's view on equity markets. July witnessed significant underperformance of Indian equities across the board, with FII selling significantly almost on a daily basis. Mid caps and small caps saw an even larger correction. While the budget provision of taxation of trusts seems to have been the immediate catalyst for such large FII selling, many high frequency indicators are also suggestive of the slowing growth of the economy. In this environment, market sentiment and perception to stress corporate groups, promoter pledges, NBFCs, especially to the home finance companies, have significantly notched up. Rating downgrades and continued poor numbers in the auto and the real estate sector have also added to the poor near-term narrative. A lot is expected of this government to help improve the demand by providing incentives or sops to consumption. But it must also be understood that the room for government finances and spending is quite low. In this context, the communication to the private sector to step on investment and bring in a far more investment friendly climate with a glide path to reduce taxes, healthy capital markets, consistent government policies is an absolute imperative to arrest this slide. The government has definitely initiated significant key reforms over the last few years, but that now needs to be matched by encouraging risk taking by private sector and household. Globally as well, one needs to be watchful of the negotiations between China and US and the developments in the Middle East and its impact on the volatile energy markets. But as it is often said, it is darkest before dawn. As we have seen multiple times in the past, India undertakes significant reforms during periods of crisis. With RBI cutting interest rates significantly, inflation under control, we may be close to the point where government in coordination with regulators and RBI can create a conducive environment to encourage risk taking. Over the last few months, we have been highlighting that the froth in valuation in mid cap and small cap relative to the large caps have reduced significantly. Large cap valuations continue to be rich as well in many sectors despite the correction we have seen in July, especially in the context of the slowing near-term economy and their likely impact on earnings growth downward revisions. Equity as an asset class is best suited for longer-term goals. We therefore continue to suggest to allocate to equities in a disciplined and systematic manner through SIP. Thank you.
Mutual fund investments are subject to market risks. Read all scheme-related documents carefully.